The Federal Reserve announced on Wednesday that interest rates will go unchanged this month, but analysts are signaling a cut could be on the horizon as soon as next month. Bankrate Chief Financial Analyst Greg McBride joins me now to break down the decision. Greg, good to see you. How are you?
Good morning, Chris. Great to be with you.
All right, so the Fed eyeing September for this cut seems like a big headline from yesterday's announcement. I know a lot of us have been looking forward to September. Yesterday would have been a nice surprise, but it looks like they're going to hold steady in September. How likely a timeline do you think that is, and what can we expect? What can the consumer expect come September?
They certainly have teed things up to be able to reduce interest rates beginning in September, but the inflation data we get between now and then has to cooperate. We've been on a better trajectory with that inflation data lately. I think the Fed has said they just need to see a little bit more data before they have that comfort level to begin reducing interest rates. The takeaway for borrowers is this: one rate cut, not going to be a panacea. But what it is the beginning of a series of rate cuts we'll likely see over the next year or two. So don't let up on those debt repayment efforts. Interest rates took the elevator going up, but they're going to take the stairs coming down.
Yeah, it's going to take a little while. But let's just get for argument's sake, mortgage rates, for instance. Let's say right now we're just going to kind of average up a little, even though it's a little bit below 7. 30-year fix right now, it's about 6.88. So for argument's sake, let's say 7. So for the average consumer out there who's looking to buy a house, refinance or whatnot, let's say there is a rate cut in September. What does that 7 get ticked down to?
Well, there's not a one-to-one correlation between mortgage rates and short-term rates. That being said, Chris, mortgage rates are going to continue trending lower as the Federal Reserve begins cutting interest rates. So, you know, if you see a half percentage point drop in mortgage rates over, say, the next couple of months, that's meaningful. On a $300,000 loan, that's $100 a month. The other thing to be mindful of is if we see a sharp drop in mortgage rates, that could bring a surge of demand back into the market that would push prices up and could offset some of that affordability benefit that lower rates bring.
Let's ask you about some of the other impacts that consumers will see based on a rate cut in September. What are some of the other aspects of this that are going to be beneficial to the people at home?
Yeah, your variable rate debts, credit cards, home equity lines of credit, those rates have ratcheted up significantly as the Fed was raising rates. They will come stepping down as the Fed cuts rates, but credit card rates on average almost 21% right now. They got to cut rates a lot just to get your rate below 20%. So don't let up on that debt repayment. Same thing with the home equity line of credit. A lot of those in double-digit interest rates now. Keep having attacking that game plan about paying down that debt. Don't sit back and wait for lower rates to come along and bail you out, because it's going to be a long haul. And then just one final point, Chris, car loans. Yes, lower rates will filter through to car loans, but it has a pretty minimal impact on affordability. A quarter point rate difference is about $4 a month on a $35,000 loan. So make sure your credit's in the best shape, shop around for the financing, and for heaven's sakes, negotiate the price of the vehicle.
Yeah, always negotiate, right? If that rate does come in September, what are the chances of seeing an additional cut before the end of the year in your estimation?
I think the odds of that are good. I think we're tracking for 2 rate cuts this year, provided that we get a little bit more good news on the inflation data. So I think we're on track for 2 rate cuts this year, but I think next year is going to be the big year. I think then next year is where you're going to see a more consistent pace of those rates coming down. 2024 is going to be the beginning. 2025, I think, is going to be a more consistent pace of rates coming down throughout the year.
And I'm going to ask you for a prediction real quick before I let you go. Jobs numbers for July will come out on Friday. Inflation numbers, whatnot. Are you seeing moves in the right direction for both of those categories, if you had to predict?
We are still seeing job growth. Well, the concern I have, Chris, is that those that have been unemployed longer than 6 months, that number has been creeping higher. It's a sign of weakness in the labor market, a little bit of a red flag. That's the one particular number I'll be focusing on when the jobs report comes out tomorrow.
All right, Greg McBride, thank you so much. Bankrate Chief Financial Analyst. Good to talk with you, Greg. See you soon.
Thank you, Chris.